Hello, good afternoon. This is Mitch Goldberg. You're watching Be the Boss of Your Money. I hate to get the show started. I hate to get the show started on a bit of a negative, but it was kind of a blasé day. For the stock market, not an overwhelmingly bad day, just a little bit of a give back after a couple of very strong weeks. Yeah, the NASDAQ was off a little bit, but it was up big yesterday. The Dow has been on a major tear, over 10% in the most recent history. So to be off a little over 300 points today, which is what it did, not a major disaster by any stretch, but people are questioning, is this rotation over? We saw the rotation out of work from home, out of the big mega tech stocks into the reopening stocks like energy, industrials, financials, etc. Is it over? And what do we have to worry about? And is the stock market finally getting nervous about the huge rise in COVID positives in the United States? That's what we're going to talk about. We're going to get started right now. All right, we're back. Thank you so much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This is a place where you come to for the latest and greatest in market perspective to find out what's really going on with your money, to get a better understanding about your personal finance, business strategy, investing tips. We talk about all of it, financial planning. We're going to be talking more about Social Security and other big topics because we have some changes coming up over the near term with a new administration. But let's get into what we need to talk about first and foremost, and that is the very, very scary headlines. When I say scary headlines, I'm talking some pretty scary stuff. So what are some of the headlines? Like this one. Average COVID cases and hospitalizations rise in nearly every state across the U.S. Ohio Governor DeWine, in risky move, reimposes tougher mask mandate. El Paso, Texas, calls in 10 morgue trucks as coronavirus cases surge. Biden COVID advisor says U.S. lockdown of 4 to 6 weeks could control the pandemic and revive the economy. So these are some scary headlines, and we need to talk about this because so far, there's an expression, whistling past the graveyard, which I think is appropriate for the time being. But what's happening is this. While we are all focused on the election, which is over, the vote continues, but the election is over. And we see the political wrangling going back and forth. And now it looks like, everything is being contested. So now we're finally, I think, burned out a little bit from that. I don't think anybody expects Trump to remain as president. He could stay in the White House. And one tidbit of information is the White House has nothing to do with the Constitution. The White House came after. Being president doesn't mean you have to be in the White House. You could be president and be somewhere else. So I don't think we have to necessarily worry about a constitutional crisis. But nevertheless, let's move on to the stock market and what's really going on. Dow backed off a little bit. We are finally starting to really grow concern because we now yesterday, a new milestone, over 140,000 new COVID positives came out yesterday. And that's only expected to climb. Dr. Scott Gottlieb, former FDA commissioner, said he doesn't expect to peak until sometime in the middle of January. Is he right? Is he not? He's been right in the past, but still the middle of January, that's like 2 months away still. So if we're at 140,000 plus cases a day now, and we're going up through January, where are we going to be soon? 200,000 a day, 250, 300,000. The whole point of the mask wearing and the social distancing was not to eliminate COVID, but to slow down the progression so we don't overwhelm our health system in this country, and it'll give people a chance to go to the hospital, get out of the hospital, and come out better. But when the hospital is overrun, understaffed, under-equipped, that's when you have a problem with these massive surges. But you know that already. So let's take a quick gander at today's big news and what I think we have in store for tomorrow, which is probably an improvement. and I'll show you why. Let's take a quick share screen, and I'll show you how the market did today. It's one thing to know how the market did. It's another thing to really, have a little bit of perspective. Okay. But the Dow off 317 points, not a disaster, off a little over 1%. S&P off about the same percentage wise. NASDAQ wasn't off as much. And the big loser of the day is the Russell 2000. That's been the big winner of the day almost every day. So to see the Russell 2000 come in a little bit, not the end of the world. VIX is up about 2 points, comfortably in the 25 region. Okay. The VIX goes up when money managers, professional investors are worried. That's the fear gauge. All right. So when it goes up, there's more fear coming into the market and people are worried. So listen, I know we have a vaccine and there's talk about that. And there's talk about Pfizer's vaccine. Okay. By the way, I see the reactions out there. Yes, that's right, Chris. That is a wow reaction. Thank you very much for watching, by the way. Thank you, Maddie. I see you out there. Thank you so much. Yeah, the news is pretty grim. So, we're so optimistic for the COVID vaccine we expect to get soon from Pfizer. The Pfizer is the kind of company, they wouldn't speak so positively about their vaccine testing if they didn't have really good reason to be so optimistic. So it's a game changer. But keep in mind, this vaccine has to be stored in something like negative 80-degree temperature, 80 below zero. And once you get the first dose, you have to get a second dose 21 days later. Now, that doesn't really shout to me, hey, by January 1st, everybody's going to be vaccinated. It's going to take a long time for people to get vaccinated. In the meantime, we have to get through the winter and through the spring. And there's a lot of potential bad news because of the COVID virus, because of that. And what's that going to do for the economy? The economic news, believe it or not, has been getting better. Today, we saw first-time unemployment claims. They came in a little bit lower than expected, continuing to show a positive trend in the employment sector. But with the rising caseload of COVID and with different governors like in New York and Ohio and New Jersey starting to come out and say, and California saying, we need to maybe start to tamp down on socializing and, people activities, restaurants, gyms, that sort of thing. I'm thinking like, here we go again. Are we all going back to the office? Or I'm sorry, are we all going back to the home office again? So that's what really people are worried about. Based on today's trading, the worry doesn't look to be particularly too deep. And I'll show you what we have in store for tomorrow. This is pretty good. I'll show you this. Disney is up over $7 a share, up over 5%. Big Dow company, better than expected, earnings, better than expected subscribers for Disney Plus are up to something like 75 million subscribers. All right. The stock is popping aftermarket. Just like to get down to the news. Blows past expectations for its first year with 73.7 million subscribers. Shares rise 6%. Reporting Q4 bright spot in its direct-to-consumer business. And then take a look at another one. This is one we haven't seen much action in for a long time. Hopefully this will come up. There we go. Cisco up 8.5%. When was the last time you saw Cisco give you anything to cheer about? So Cisco is up. So we've got two pretty big stocks, Dow components, that are looking really strong in the aftermarket. And I think that will probably help set the tone for tomorrow. All right. And let's just take a quick look. Sector ETFs. All 11 major sectors of the economy of the S&P 500 were down. Down the least were consumer staples. That's stuff that you need, like toothpaste and toilet paper. At the bottom was energy, materials, and financials, all the stocks that we talked about leading the way recently. Okay. So not a horrible day, just a little bit of give back. And here's something I haven't looked at for a long time, but this is the map. And this is from, I didn't want to make that smaller. This is the Johns Hopkins coronavirus map. And it basically shows you, let me move that over a little bit. This you could look this up yourself. It's very interesting. The the darker the red, the more COVID cases. And you see there's a lot of red popping around Houston. You see a lot through the north Midwest. And it's basically every state is seeing a rise, some states more than others. So this is what we're worried about. But you can check this out. I think we passed 10 million cases in the United States. We passed over 1 million in just the state of Texas. So I'm going to stop sharing the screen. So let's talk about what to expect. I don't think this is it for the sector rotation. This is my opinion. I still think we have it. Like I said the last few days, I think the easy money was made on the sector rotation, economy reopening. We started seeing the Dow rise last week after the election. Even before the election, it started to rise. What goosed it up even more was the news that Pfizer said that their vaccine is 90% effective, which is incredible. Again, the concern is it's going to be a real long while until it's broadly distributed. So in the meantime, we have to get through this valley of carnage in the economy in order to get to the point where we're actually getting the vaccine broadly distributed. So this is the concern, and this is the worry of the market. And I think it's just going to be a choppy market. That's right, I said choppy, some chop, because it'll just be a bounce between the large tech stocks, the FANG M, that's Facebook, Amazon, Apple, Netflix, Google, Microsoft, and the rest of the market. I'm talking about industrials, energy, financials, consumer discretionary, okay, materials, those stocks. So that's what we're in for. Now, we could still see a generally higher trend in the market. I've said this a bunch of times in the past. I haven't said it in a long time. I'm saying a lot of things that I haven't said in a while. But if you recall, I said in a very perverse way. I didn't say it in a perverse way. I'm saying in a perverse way, a vaccine could actually be a negative for the stock market. And I know you're thinking, how could that be? Because we saw the market go up. No, you saw the Dow Jones Industrial Average go up. That's just one index. But the big index that everybody's tied to, we spoke about this at length yesterday, all about the S&P 500, that index has been going down, not up, because it's so dominated by a handful of huge mega cap tech companies and tech-related companies. So if you see those companies come down on optimism about an economic reopening and optimism about an improving economy, those stocks could go down and take the overall S&P 500 down with it, and the NASDAQ as well. So getting this vaccine could be good for the economy, but not necessarily good for the stock market, because so many portfolios, even if you're not in an S&P 500 index, it seems, not so many portfolios, ETFs, mutual funds, et cetera, are tied to the benchmark, the S&P 500. By the way, you cannot invest directly into an index. You could invest in a security that tracks or mimics an index. Just want to get that out there. So that's it. That's my story for Thursday. I don't do these live streams on Fridays, but I do send out a pretty good, quirky, cool, I think it's really good, blast email every Friday. If you're not receiving that email, you want to be in on the list, send me a DM with your email and I'll put you on the list. I'd like to thank you for watching. And thank you so much for giving me your time this week. And I will see you Monday. I know the news over the weekend is going to be very interesting, because it always is. And I hope you are well and healthy. Thank you.